Welcome to the Buying Your First Home podcast, your personal guide through the Australian housing market. Here we tackle the big questions and the small details that come up when buying your first home. From financial prep to finding the right neighbourhood, we're here to ensure that you've got all the knowledge at your fingertips. So let's take the first step towards unlocking the door to your new home. Hey guys, welcome to this week's Finance in 5, where we take you through the latest in property and finance. Jayden and Simon here, starting from the top, and Brisbane's finally out ahead. Not state of origin, we're talking about property prices. And I guess depending on which side of the market you're on, this is probably good news, or it could be bad news.
Brisbane has overtaken Canberra as the second most expensive capital city for housing just last month. So overall, the Australian Home Value Index, which is something that they use to judge the value of homes across Australia, it rose 0.8% in May, which is the 16th consecutive month of growth. And this is where Brisbane finally came out ahead of both Canberra and Melbourne and sitting just behind Sydney in terms of the most expensive capital city in Australia.
There's strong growth in some of the mid-sized capitals. Perth was up 2%, Adelaide 1.8%. But yeah, Brisbane 1.4%. It was surprising with some losses. Hobart was down 0.5% and Darwin by 0.3%. Sydney crept up by 0.6%. So we have seen a lot of those markets like Perth and Adelaide that shortages are really driving this price growth and putting a lot of pressure on there because there's less supply, more buyers, pushing the prices up.
Yeah, in fact, extremely low levels. Even in Perth and Adelaide, the supply is actually more than 40% below the 5-year average. So a lot less properties available to buy. And Brisbane is not far behind, 34% below the 5-year average. So there are less houses that are on sale at the moment, and people still want to buy them. So that's putting this upward pressure on prices, which kind of is driving that growth. On the flip side, Hobart's listings are 41% above the 5-year average. There's a lot less demand there. Houses aren't selling as quickly, and that kind of explains the sort of decline in growth that we're seeing there.
Yeah, Sydney's been one of those ones where it's a bit up and down. There was an overall price drop of 12.4% before. There's been a bit of a recovery, and we're now back at the top of a 14.1% rise to get us where we are.
Yeah, and what's interesting with Brisbane is a few months back, actually, Brisbane was ahead of Melbourne in terms of the median dwelling value, which includes both houses and units. But that was mostly explained by Melbourne having a much higher density of units, and units are less expensive than houses, so that tended to drop down the median dwelling value overall. But now Brisbane is actually above and ahead of Melbourne in terms of the median house value as well. So it's not just the density of different types of properties. Brisbane is well and truly more expensive to buy in than Melbourne at the moment.
So this can be good or bad news depending on where, like I said, you're looking in the market. If you own a home, good news, you've got more equity, things to do. But if you're trying to get into the market, it is getting tougher. And we're seeing that with the rise of $1 million suburbs in Brisbane. Like 10 years ago, I wouldn't have thought about it. But interestingly, formerly affordable suburbs in Brisbane are joining the $1 million club. So specifically, we're seeing Nudgee, McDowell, Callumvale, Mount Gravatt East, and Wynnum joining this $1 million suburb club.
Yeah, and sort of looking at it in a broader context, Brisbane now has 73 suburbs with a median house price of 7 figures or more. And there's a lot of things that are driving this growth. Primarily, it's just this unstoppable demand. The demand in Brisbane has been high for a long time, and it continues to be high. And we're also seeing some effects from gentrification. So if you're not familiar with that term, gentrification is a term for when older suburbs or older areas become sort of renewed. So, you take places like Fortitude Valley, for example. 20 years ago, 30 years ago, my parents told me that it wasn't safe to go out in Fortitude Valley. It was a dangerous place, and the only people going there were the crackheads and the druggies, basically. It wasn't a very nice place. Some people still think that, but it's actually changed a lot in terms of, modernization. There's cafes, bars, restaurants, fancy places, and that kind of gentrification drives this growth. It becomes more desirable to live in a suburb, and then that desire drives the demand, and then the demand causes the price growth. So we're seeing this in some of these broader Brisbane suburbs. Like Stafford is another example where there are lots of these homes that were built 30, 40 years ago. They were a little bit run down. And because people have been pushed out of the inner city circle when they're looking to buy, they're buying these older homes and renovating them or knocking down and rebuilding. So kind of renewing these suburbs, which does bring that price growth.
And we've definitely seen that in these specific suburbs, like some of the ones I mentioned before, Nudgee, they get sort of the benefit of that next one along. There's much more expensive suburbs next door as far as Clayfield or even Ascot further along. But it's had that impact of some of those more expensive suburbs. People have been priced out on the next one along and to Nudgee. And what's next is the ones that are joining because people are looking for that location, the amenity and the lifestyle that you can get there. So some of the future candidates, I guess, using a similar approach could be Scarborough, which is near Sandgate. In the north, there's Salisbury in the east, because obviously Greenslopes, Annerley, all those places are quite expensive now. Arcanubia or even Manly West out on the Bayside that we're finding it's starting to get more and more expensive. But if you're looking, it could be good places to start if you kind of like some of those other areas that are nearby.
Yeah, I think one of the takeaways here is to, if you are looking to buy a home, is to look for these emerging suburbs. The next one along is a great place to look at buying a home now, because in a few years' time, as the market drives and changes, you'll be in a position to, get a lot of equity growth in your house, which means you'll have more home value. And if you do want to move to a suburb that is more desirable for you, then you'll have the equity, which will allow you to do that. So, looking for areas with good growth potential is a great strategy for your first home. And you still want to make sure it's affordable, though. So there's no use looking at a place like Nudgee, for example. At the moment, if your budget is only 800,000, I'd suggest you kind of look forward and look sort of further out and see where the next development area could be, and sort of have a look at those and go from there.
So if you're in the planning stages, one thing that has been really grossly overlooked is the First Home Super Saver Scheme. So the First Home Super Saver Scheme allows a concessional super contribution taxed at 15% instead of your normal rate, which could be up to 45%. That means you could save up to a couple of $1,000 extra. You can add a contribution of up to $50,000 to help accelerate your savings.
Yeah, and despite it being an amazing opportunity for saving up for your deposit, we've actually seen a decline in usage. So last year in 2023, there was 8,700 people who used the scheme, and that's down from 9,500 in 2022. And I think the main reason that people aren't using this scheme is it sounds pretty complicated. You've got to put your money into your super. You probably need to get the accountants involved. It's all this financial stuff, and people tend to think, it's too hard. I won't worry about it. We'll just save the normal way. But if you think that way, you're probably missing out on a great opportunity.
And it's definitely one you need to be a bit prepared for, because there are limits. You can only make up to $15,000 a year in extra contributions to your super that go to that deposit. And it's only up to a maximum of $50,000. So it's not fantastic if you're trying to buy a home next week and you decide to put a bunch of money in your super to use as a deposit. But it's definitely good if you're planning in the next year, 2 years or 3 years.
Yeah, and in terms of how much you can save, if you were saving, $30,000 contribution over a 2-year period, then you will save $5,819 in tax in savings for that. So, that's basically free money for your deposit in a sense.
Yeah, there's a bunch of different calculators where you can test this because, like you said, Simon, it can be thousands of dollars. Like that 5,000 can cover half your stamp duty. It's huge. It could be furniture that you literally can do with this scheme if you organize. But yeah, there are some extra steps. You need to potentially set up with your HR and get them to take part of your salary and do it as a salary sacrifice, which feels like it's hard, but like it's literally an email. You can say, just, max out my contribution to this financial year. And if you are, doing some tax planning before June 30 in the financial year, it could be worth, like you said, talking to an accountant, because they might be able to set up strategies. There are cutoff dates as well. Apparently Australian Super's cutoff is the 21st of June. So you can't leave to June 30 to make these contributions if you're trying to get in before the end of the tax year. But it could be literal thousands of dollars that are going to help go towards your home purchase by doing this scheme. So I would definitely suggest looking into it.
Yeah, and on the subject of tax savings and tax cuts, there is some pretty big changes upcoming from July as well, which I think we've covered previously, but let's go into this a little more detail. I think everyone's probably feeling the pinch at the moment in terms of retail spending. It's more expensive just to live and to save, and houses are getting more expensive. And that's certainly something that the statistics are showing as well. So at the moment, there is less retail spending. Consumer sentiment is a lot lower. So people aren't really spending as much because they're concerned about the cost of living. So these changes on the horizons maybe can, give a little bit of relief for that. So there's a couple of things here that are going to make life a little easier. You may have heard that there is an electricity rebate of $300 per household with some additional state-specific rebates as well. And lower electricity prices, cuts of 2 to 4% starting in July. So, that's one good change that can help you feel a bit more positive.
Yeah, there's also the stage 3 tax cuts that are coming into effect in July. So just as an example, if you're earning $67,600, pretty specific example, but if you're earning that, you'd receive a tax cut of $1,369 annually, or about $52 a fortnight. So it's going to help. An extra $50 a fortnight is huge. You can put it to your bills, everything else with your savings. And there's wage increase too. So Fair Work Commission made a decision on award wages. So there's an expected increase of 3.6 to 4%. So again, that actually could be an extra $65 a fortnight based on that similar salary. So it can make a huge difference with some of these changes. There is some relief coming. But on the flip side as well, the governments and the Reserve Banks be watching this and saying, well, if people end up taking that tax cut and spending it on holidays and on buying shiny things in retail, that it could put pressure on inflation. It could mean rates will have to rise. So it's an interesting one. It's really good for part of the economy, definitely. It's going to be helpful having that extra money. The banks and a lot of the forecasters are assuming people are going to save it just because of the way the market is now, but it will be interesting to see how that plays out later in the year too.
Yeah, so I guess if you don't want to see inflation and rate rises, maybe keep the money in your savings deposit rather than go out on that holiday to Bali. But, honestly, I'd say that it's a smart idea to, if you do get that increased disposable income or even other types of income like a tax return, any sort of lump sum payments that are outside your normal salary or wages, then those are great opportunities to put aside for saving up for your deposit as well. So the last one here, Jayden, there is some new data that's out on the housing crisis solutions, and it kind of shows that the solution is starting to work, but pretty slowly. So, just to give some context here, if you are a renter at the moment, I'm sure this is no surprise to you, but typical rents have increased by 9.1% over the past 12 months. And the problem is a lack of supply. Much like with buying a home, there's not enough houses for people to rent, so there's more competition. And the real strategy here, which is the government's main game, is to build more homes over the next 5 years. And there's some data to show that this is a good strategy. It's going to work. So regions with more home completions in recent years, so more apartments or houses being built, have seen slower rent growth compared to the national raises in rent.
Yeah, so that long-term effects of the new supply have lowered the housing costs and have helped lower the rents. But it really relies on the government hitting those targets. The National Cabinet's target is to build 1.2 million homes over the next 5 years. And the current pace is only making about 170,000 homes a year. So it's short by 240,000 a year. So there's still a pretty big shortfall there to get those lofty targets.
Yeah. And one of the interesting kind of sidebars from this is part of the reason why it's the construction rate and pace is lower is because of government investment into infrastructure and other large projects. So, there's only so many builders to go around. So when the government is going out and building these big projects, they're actually pulling resources away from the home building industry as well. So there's a bit of push and pull here in terms of trying to hit that construction pace while still trying to achieve their goals of infrastructure. So it's a tough job for the government and for anybody involved in the building industry. Let's just hope that we can see some changes here that'll help them reach that $240,000 and 240,000 home annual target, which will definitely decrease the pressure we're seeing in terms of this housing crisis.
That's it for today, guys. Hope you enjoyed the podcast. So we went through Brisbane, obviously some market movements there and becoming the second most expensive capital city in Australia. We went through some of the multi-million-dollar suburbs and just thinking about that strategy. I know it can feel a bit confronting if you are trying to get in the market and saying, well, I'm getting priced out. What do I do? Well, there's always that next one along and the sort of suburbs that are experiencing gentrification. And if you are saving, look at that first home super saver. It's huge. It could be really helpful and could be in the difference between getting in the home this year to next. That extra $5,000 go a huge way. At Hunter Galloway, with a home for home buyers across Australia. If you need help with finance, buying a home or refinancing, hit us up at huntergalloway.com.au. Until next time, we'll see you later.